Hi traders, this is Vishal and you are looking at the Nifty short-term view, episode number 24. Now, what is the reason of making today's educational video? So my friends, all of us know that Nifty futures is in a downtrend and suddenly today we saw a very good pullback almost from the day low of 15,689 till today's high of just a little bit above than 16,000. And we can see that Nifty futures have closed almost 140 points up and Bank Nifty futures have closed close to 311 points up. Now the question is this just a one-day dead cat bounce, or is it going to result in a decent pullback on the upside? Is it going to be a relief rally in this entire sell-off? And I'm possibly assuming that all of you are thinking in the same manner. So that is the reason of today's video. First, I'll check the daily time frame charts. In the daily time frame charts, considering the trend, it is obviously that the trend is down. You can see prices are trading below both of the moving averages. And what we can see in the hourly time frame is a little bit different. In the hourly time frame, the trend is flat. The prices are not above the moving averages nor below. So the trend is flat suddenly. And if you check the hourly time frame charts, I'll just change the candlestick chart to a line chart and you will be able to see 1, 2 and 3 lower lows consistently. But in RSI, we can see 3 lows which are higher than the previous one. So this is a sign of momentum which is weakening on the downside. So the possibility of a pullback was getting higher and higher. And if I convert this candlestick chart to line chart, in the daily time frame, you can see that we have 2 lows. This particular low is the lower than the previous one. And even in RSI over here, we have a low which is slightly higher, not a lot, but just slightly higher than the previous low. So this is a classical positive divergence. Now, just positive divergences are not enough for the market to take a U-turn, because many times I have seen in my 15 years of trading career that many times a positive divergence or even a negative divergence is broken and then market moves in the opposite side pretty violently. So we have to take this particular one-day move with a pinch of salt. We cannot just be absolutely sure now the markets are going to head higher. But yes, considering you can see the candle pattern which has occurred in last 2 days, this is a sort of hammer, although this hammer is not very, very strong. But along with this small hammer, we can see a big green candle today. So when we combine these two candles, we can see a bullish engulfing pattern. And if I check the daily chart in slightly more detail, what we can see is yesterday just it was missed just by a little bit. I guess you can see this is a support band basically. This entire yellow horizontal band which you can see, I'll just share with you the levels actually. The levels are 16,250 to 15,900. So this entire band, my friends, was a support. And if you check yesterday's close, which you can see over here, so yesterday's close was 15,872. So we just missed by almost 28 points. And since we had a sort of positive divergence coming up, immediately the market pulled back and now we are within that support band. All right. So the question is how far this pullback can continue. First thing, I will check the hourly time frame charts. In terms of immediate resistance, if this pullback, if at all it continues on the upside, because I can also see a trend line breakout in RSI which has occurred. You can see here, right? So if this if this move continues on the upside, the first resistance band which could be tested, the levels which could be tested in Nifty futures might be 16,158 to 16,351. So this is the entire resistance band which can be tested. And in case if market pulls back even more, then this is the next resistance band which could be tested, 16,488 to possibly 16,429. So these are the levels which can be tested on the upside. But again, my friends, take these levels with a pinch of salt. The reason for that is we are in a market where volatility is very, very high, and you have seen many times in last 1 month, just one day pullbacks, they don't sustain, and suddenly after 3-4 days market starts coming down. So in case if the pullback happens, it could be very, very fast. It will not be slow. I feel it could be very, very fast, and it will be over also very fast. Now, am I a trader who buys in pullback? No, I'm certainly not a trader who buys pullback. I'm more of a trend trader or a breakout trader or even a swing trader. So I'm not a person who buys in it. So in case if you're having short-term swing trades which are on the short side, be very much vigilant and start trailing your stop losses aggressively. All right. Now let's have a look at the Bank Nifty futures. In the Bank Nifty futures, what we can see is there is no positive divergence whatsoever in the daily chart, but in the hourly chart, we do have 3 lows consecutively, which are lower than the previous one, and we have a higher low situation in the RSI in the hourly chart as well. So we do have a positive divergence in the hourly chart, but in the daily chart, we don't have any such positive divergences in the RSI. Only thing what we can see is that the RSI was almost below 30. That is one of the reasons for this pullback. One more reason what I can say is the price is pretty much far away from the moving averages. You can see moving averages somewhere near 35,877 or something, and the price at today's low, if I consider, was at 32,317 or 16. This is a massive difference, and generally when these things happen, then price tries to move near to the moving average, or maybe the moving average tries to come near to the price. So in that process, small pullback can happen, but again, kindly take this as with a pinch of salt, because we have seen in history in last 1 month that the short-term pullbacks have not sustained, and immediately within the next 3-4 days markets have started coming down. Now in case if this time the pullback continues, the relief rally continues, then what are the levels which could be tested? Obviously the gap which has been created before 1 or 2 days, this will be filled, and the immediate levels which could be tested could be 34,472 to possibly somewhere over here, which is 33,646. So this entire band from 34,472 to 33,646, this entire band might work as a short-term resistance, and these level could be tested in case if Bank Nifty continues to rally further as a short-term pullback. As a trader, I am repeating once again, my friends, I'm not a person who tries to buy dips when the trend is down. I'm more of a breakout or a trend trader, or even as a swing trader. And even in my weekly sectoral analysis, which I shared with all of you on Saturday, I had clearly shared that we are at important supports, because just below this, we had some supports in Nifty futures. So a pullback probably was due, maybe if not over here, then maybe at this level. So it seems markets are reacting a little bit earlier, and possibly I could say people who have not been able to exit at a decent level, this could be a good chance for them. All right. So trade wisely. Do not have positions in the market which are with extreme high amount of leverage, and trade safely. Thank you.